This is my time. I'm on the rise. Can't hold me down. I'm too fly.
All right, welcome back to the Doctors Investor Club podcast. This is episode 10 of the Physician Wealth Framework series. The deal flow equation, attracting and filtering smarter investments. Let me ask you a question. Where do your investment opportunities come from? Is it a friend texting you about a real estate syndication? Is it a business operator you met once at dinner? Is it a pitch from your financial advisor? If so, you're not alone, but you're vulnerable. Random deals equals random results. In today's episode, we're going to walk through the deal flow equation used by family offices and physician investors inside the Doctors Investor Club. You'll learn how to filter deals in minutes, not hours, how to attract higher quality opportunities, and how to stop chasing shiny objects that aren't aligned with your goals. Let's get surgical. Most physicians treat deal flow like a slot machine. You see something, it looks interesting, you're not sure how to evaluate it, you feel pressure to get in or you'll miss out. That's what we call reactive investing. A lot of physicians do this. Here's the problem. You're outsourcing your freedom to the people who build your pipeline. If they have different goals, different risk tolerance, different timelines, you end up saying yes to deals that don't really match your strategy. Even worse, you get deal fatigue. You stop reading decks. You feel burned from a few bad deals, and you go back to your W-2 and hope that your 401k bails you out. We're done with that. It's time to flip the flow. Here is the core framework we use with physician investors. Aligned deal flow equals clear filters plus curated access plus smart peer input. Let's unpack that. Number one, clear filters. If you don't know what you're optimizing for, every deal will look shiny. Your filters should include time horizon, short-term cash flow versus long-term equity, deal size. Is it $25,000 you're putting in, $50,000, $250,000? What's your risk appetite? Is it core real estate or opportunistic roll-ups? What is your asset class? Are you targeting real estate like multifamily or short-term rentals or self-storage? Or are you interested in private lending or medical private equity roll-ups? What is your tax strategy? Are you prioritizing depreciation using cost segregation or any other tax strategies? If it doesn't fit your filters, it's a distraction, not a deal. Number two, curated access. You don't need more deal flow. You need better deal flow. That comes from trusted sponsors and operators, co-investment groups like Doctors Investor Club, vetting platforms with real due diligence, peers who refer opportunities after they've already invested. The question to ask isn't, is this deal good? It's, is this deal good for me right now? That's what curated access helps solve. Number three, smart peer input. If you want to go fast, go alone. If you want to go far, go with other doctors who've already done it. Inside the Doctors Investor Club, the best deals often come from one physician saying, I've done 3 deals with this operator. Here's my experience. That shortcut is worth 10 hours of Googling. You want to build a bench of 5 to 7 physicians or wealthy families you trust, who think differently, have real reps, aren't just pitching you something. You don't need to be an expert. You just need to know who to call. Inside the Doctors Investor Club, we use AI tools from the Family Office Club to help physicians shortcut the learning curve. You can access our private circle community where we share due diligence tools, co-investment threads, and AI-based deal filtering frameworks. These tools help members evaluate deals faster, compare past performance from operators, use AI to identify blind spots in PPMs and pitch decks, and crowdsource wisdom from other physician investors. If you've ever felt overwhelmed by pitch decks or unsure who to trust, we built this to help you go from pitched to picky. Now, let's get even more tactical. You can use this 4Rs framework to evaluate any deal in under 15 minutes. Number one, return. Is it clear what the expected return is? Are there cash flow projections? Is there an exit upside? No pro forma equals no go. Number two, risk. Where do you sit in the capital stack? What are the base and downside cases? Is the sponsor putting in real money? Remember, risk isn't bad, but uncompensated risk is. Number three, recurrence. How predictable is the cash flow? Is it monthly versus quarterly versus no cash flow? You may get no cash flow when it's a development deal. Is this a one-time pop or recurring income? Cash flow should be a feature, not a hope. And number 4, role. Are you passive or active? Are you being asked to help raise money? Will they need ongoing help from you? Know what role you're being pulled into and whether it's worth it for you. Here's the real transformation. Don't wait to be pitched. Build a pipeline that serves your game board. Let go of the idea that deals just show up. Start designing a repeatable system to attract curated opportunities, filter with clarity, share intel with peers, and say no 90% of the time so you can say yes with conviction when it matters. This is all about building your investor DNA. Your challenge this week: list your deal filters, your timeline, your target returns, your risk appetite, asset class, involvement level. Write your deal flow score on a scale of 1 to 10. How intentional is your current deal pipeline? And then number 3, ask one peer, what's the best deal you've done in the last 12 months and why? Steal that due diligence and leverage that trust. Coming up next, in episode 11, we're going to tackle why proximity is power. Who you invest with matters more than what you invest in. Because your network is your net worth. And the wealthiest physicians curate not just their portfolio, but their people. This is the Physician Wealth Framework Series, brought to you by the Doctors Investor Club. Let's stop chasing deals and start designing pipelines. See you in the next episode.
This is my time.